Hey everyone, welcome back to the channel. Here we're going to be going over Bitcoin outlook. So where do I think Bitcoin is going and how you can use this video and this market outlook to prioritize your crypto portfolio and prioritize some of your crypto trades. I don't really trade Bitcoin or crypto myself, but I now understand that Bitcoin is the king of crypto, as we say. It's the main sort of crypto. So we're going to be going over outlooks on Bitcoin specifically. We're going to be looking at key levels, areas of where price could target, where we are now in price, and how you can frame any ideas on Bitcoin. Okay, so here we have the weekly time frame in front of us. Now, if we just zoom back, we haven't got much data to work with at all, so it's, we haven't got too much here to work with, right? So we're going to be dealing with the most recent structural ranges, right? So I made a tweet recently on how we should be approaching not just Bitcoin or crypto, but any market, right? We're going to be approaching it using the pillars of structure, PD arrays, or premium and discount arrays. We're going to be using liquidity pools, and we're going to be using fair value gaps, right? So I'm just going to write that down on the side of the page. We need to be using structure, PD arrays, or premium and discount arrays. We need to be using fair value gaps, and, let me label that properly. We need to be using fair value gaps, and we need to be using, last but not least, liquidity, right? So these four things are going to pillar how we analyze this market and how we make our outlook as accurate as possible, okay? So from here on the weekly time frame, we're going to start off by looking at number one, which is our structure. So if we dissect our structure here on Bitcoin, what we see here is we see a break of market structure in this region. So we saw a low here that made the all-time high back in 2021, and then we had the massive break over here, right? Now from here, we understand that we are bearish. We have a bearish structural dealing range. Now our high here coincides with the all-time high. So this is our high in the market. This is our structural high, and this is our structural low. Now from here, we need to understand that we've identified our structure. So our first rule has been ticked. Our first pillar, shall I say, in the ICT concepts of building a narrative is our structure. On the weekly time frame, we have a high and a low that's been outlined. The next thing we're going to go on to is number two, right? And number two, simply put, is PD arrays, right? Premium and discount arrays. Are we in premium? Are we in discount? Right, let's have a look, right? So again, we're going to be using the Fib tool here or the Fibonacci tool here, and it's very simple. You only really need two numbers to actually do this properly. You only need even one number to do this, but let's have a go. Let's have a look. You want to draw the Fib tool from the swing high down to the swing low over here. Let me repeat that again, just so people have that in their brains. This is how you use the Fibonacci tool when you want to identify premium and discount arrays. You want to start off from the swing high, and you want to project the Fibonacci tool down to the swing low. Notice how we haven't got all the numbers over here, so if I just bring the settings up, these are my settings. You need 0, you need 1, and you need 0.5. 0.5 is going to be very important to us. So let's zoom in price and have a look. We have our high over here, I'll have to get rid of that, and we have our low over here, delineated by our structure. Now, our next thing we want to look at is our premium and discount arrays. The 0.5 level represents the equilibrium. So this is the 0.5 level. Now, the 0.5 level is simply halfway between the high and the low. Now, above that, we should understand intuitively that it's going to be the premium range. We are in a premium range above the 0.5 level. So if I label that premium, just so people can see that on the charts, and we're going to have, of course, our discount, which is below the 0.5 level. Now, from a premium and discount perspective, what are we looking for in price? Now, if you remember, the next thing we're going to be looking at is our fair value gaps in price. Our fair value gaps are very important, okay? So let's zoom in and have a look over here in the premium. So we're now in the premium above the 0.5 level, and we are now going to be looking out for fair value gaps. These are inefficiencies that price action has left in the past. And the reason why these are important is because price will look to rebalance these areas of inefficiency in the future. That's why fair value gaps are integral to pretty much any ICT strategy you use. Fair value gaps is like the bread and butter of what we do, as well as structure, as well as PD arrays, right? So our fair value gap here on Bitcoin is going to be over here, because if I zoom into price, we have a fair value gap over here. So I'm going to label that with a gray box, and I'm going to label it fair value gap. So that's our fair value gap, or simply put, FVG. So that's one fair value gap we're interested in, right? This becomes a POI. And the reason this is a POI, or a point of interest, is simply because price leaves inefficiencies. Price leaves a fair value gap over here. So when price leaves a fair value gap, we understand price will look to rebalance that area in the future, and that becomes a POI, hence a point of interest for us, and that's why we mark it on the chart. So if I zoom out in price, we can see how that will affect our analysis here on Bitcoin. We have a fair value gap that I've delineated with a gray box over here, and I'm labeled it FVG for short. We have a fair value gap over here, so we need to understand that what makes this fair value gap significant in our analysis. So we need to understand a couple of things that I've been through at the start of this video. We're in premium. That's the first thing. We are in premium. We're not just in premium, we're in deep premium actually, because essentially this fair value gap is the highest in this structural leg, right? The structural leg being from up here all the way down to here, right? This is our structural leg, marked out with the oval. The green oval over here represents our structural range, and we need to understand that we're in deep premium, right? That's the first thing. The second thing is that it leaves a fair value gap, so it's inefficiency in price, right? So price will look to rebalance those orders in the future. So these are the two reasons why Bitcoin has an overall bullish narrative up until this point. Even though we're bearish with our structure, we have a bullish overall narrative. And the reason for that is because price is now likely to target at some point this fair value gap. So considering this is the weekly time frame, this could take weeks, months, if not even years to get up to this point over here. But we need to understand as analysts, why are we bullish, right? So there's no point just following a signals group or alerts group. We need to really dissect why we're actually bullish in the first place. And the reason why we are bullish is simply for these reasons. Yes, we're bearish in terms of our structure, but when we have inefficiencies in price in this region, and we have a premium to deliver as well, a deep premium to deliver, that gives us our bullish narrative for days, weeks, if not months, okay? Now, the last thing we're going to go over, last but not least, is we're going to be going over the concept of liquidity. Now, simply put, liquidity exists everywhere, right? Every single pool, every single market has liquidity pools, right? So from here, if we're going to look in the premium, what we notice is that we see a two-tap trend line, or just simply a trend line, or a trend line phantom, as what some people call it in ICT concepts. So this trend line over here has two taps, one tap and two tap. And a trend line, as we know, represents significant liquidity in price. So this over here represents liquidity. Now, liquidity, as we know, is something that the markets are attracted to, right? The markets are attracted to liquidity, as well as fair value gaps, as well as fulfilling PD arrays, okay? So this gives us an extra reason for higher prices, because we have a form of liquidity that's been dropped near our POI. We also have, like we previously established, a fair value gap in this region. This is what gives us another reason to look for longs, or look for buys, or be bullish overall on the higher time frame. And of course, we have a premium, right? We have price in deep premium. So these are the three reasons why Bitcoin would be bullish, sorry, from a buyer's perspective, from a narrative perspective. Are we looking for buys longer term, or are we looking for sells? We are looking for buys longer term. Now that doesn't mean you can't take sells, but longer term we are bullish in the Bitcoin market, okay? So essentially, simply put, what we expect is something like this. We expect price to give us a healthy correction, sweeping the liquidity over here, mitigating the fair value gaps and refilling orders, and eventually getting up to this zone over here, right? Getting up to this zone over here. So that's how you use ICT concepts on the higher time frames to build your narrative. And this is a specific example here on Bitcoin. And the reason I've chosen Bitcoin is yes, it's a very popular market, and a lot of people trade Bitcoin and crypto, and it's, you know, I've been told it's the king of crypto. So it does have some weight in the crypto market, of course. And Bitcoin is generally getting very popular. So this is an outlook on Bitcoin and how you can use the basics of ICT concepts to get involved. and to make accurate biases, not just in crypto, but in stocks, forex, commodities, futures, options, whatever it is you trade. A chart is a chart, right? So you can really, these concepts can be applied to many other different markets, right? So if we just have a quick summary of what we've been through, the three things, or the four things we looked at is structure. Are we bullish or bearish? Where are the highs and lows? Where are the highs and lows? In this case, we're bearish. We have a bearish structural range from this high down to this low. So of course we are bearish in terms of our structure. That's the first thing we looked at. The second thing we looked at is our premium and discount arrays, or PD arrays for short. Premium and discount arrays. Is price heading towards a premium? Is price heading towards a discount? Now from here in this region, we are at the equilibrium, right? And we have seen that even though price has broken structure over here. So if I label that with a break of structure or simply a BOS, we haven't seen a clear and decisive premium high. So we haven't seen price get up to this region over here, the premium region. And that is another reason why we're bullish overall in terms of our bias and narrative here on Bitcoin, because we haven't seen price give us that premium. So that's another reason why we're expecting higher prices, because we haven't seen a premium, right? So PD arrays are important because we need to understand where we are in price. Are we premium price? Are we discount price? Are we at the equilibrium? Where is price headed to? Very powerful concept in ICT, generally in ICT concepts. The third thing we're going to be looking at is fair value gaps. Fair value gaps. Where is price left a fair value gap, and therefore where are there inefficiencies in the market, right? Where are there inefficiencies? We had an inefficiency all the way up here in price, and this is essentially what price will be gravitated towards. And the reason why price is gravitated towards that is because it's rebalancing orders. That's how the market works. The market creates an inefficiency, and the market will then rebalance that inefficiency in the future. And it's our job as responsible analysts, and therefore traders as well, to make sure that these fair value gaps are going to be rebalanced at some point. Could be days, months, weeks, if not years. That's just how the market works, but we need to be aware of the underpinnings. And the fourth and final thing we discussed was liquidity pools, right? Liquidity pools. Liquidity, right? So we understood that liquidity, we understand from my previous videos that liquidity exists in equal highs, equal lows, previous day highs, previous day lows, trend lines, and in this case we had a trend line, right? We had a trend line. We discussed a trend line earlier on. We had a two-tap trend line over here, which represents liquidity, right? So when we see price head up, we need to understand why is price heading up. It's not heading up for the sake of it. It's heading up for these four reasons. You know, structurally we're bearish, cool, but we're delivering a premium in this case. We're filling a fair value gap, and we're sweeping liquidity, right? So price has reasons to seek higher. The market, the Bitcoin market, has reasons to seek higher prices for these reasons that we've identified. This is like the bread and butter of your ICT concept. This is essentially the four pillars of ICT wealth, as I call it, the four pillars to ICT wealth. Sorry. Structure, premium and discount arrays, fair value gaps, and liquidity. If you can get these four things down, you can then practice them, and they can be used in any market, whether it's gold, forex, crude oil, any other crypto you want to talk about. The list goes on and on, right? So if you can get these concepts grasped in your head, you're essentially good in any market, right? So this is what you need to essentially get your higher time bias, and I've done it here on Bitcoin. So overall, Bitcoin, the narrative is to seek higher prices. Now, that doesn't mean we can't do something like this, because we understand we have a fair value gap over here in this region. We've left a fair value gap here as well in the discount. Price is perfectly within its regions to actually seek lower prices, right? So we could indeed see something like this. We could see price tap down before heading up higher. That's a possibility. But we need to understand longer term we are bearish on Bitcoin, and the reason for that is the four reasons you see on your screen. So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.